We're going to kick it off as usual with the stock of the day. REA Group, the big property platform group, full year core revenue climbed 7%, reported this morning 1.8 billion, with Australian revenue up 11%, but its net profit fell 19% to 552 million after recording an impairment on its operations in India, which it sold last month. The News Corp controlled online real estate listing platform said it expects the number of homes for sale to be flat or slightly down in the coming financial year after an unexpected surge in the 3 months to the end of June. They completed $100 million share buyback, acquired a controlling stake in Simplicity Loans and the iGuide 3D visualization business. Now, after all of that, REA lifted its final dividend by 25%. Mathan, what did you think of the REA result?
Look, I think it's a phenomenally good business. It's one of the old techs with Seek and Car Group.
Yeah.
Look, it's probably the better of the three as well. So look, it's a great business. It's just in the wrong side of the cycle. There's going to be uncertainty. The market's going to wait and see how this plays out. In Australia, we've had nearly 2 years of growth to value rotation, and I think that'll continue with bond yields where they are. So growth stocks are going to be under pressure. So I think REA will remain under pressure. I think it's a great business, but we've got uncertainty in the property market. Most people expect a bit of a pullback. Granted that, on a grand scale of things, that's irrelevant. But you get, if you read the papers, you think the property market's going to collapse to nothing. But the reality is, real estate does well. It's a turnover business, and I think the turnover will probably slow down. I think that I kind of feel like, well, I bought my house when I think it's 2006, and I remember before the GFC, and I mean, obviously we didn't know that was going to happen, but the market was dead. There was very little turnover, and you can go to an auction, there was only 1 or 2 people bidding. We're kind of in that kind of a lull period, and I think that's negative for the REA in the short term. I think short to medium term, it's still going to be a bit volatile, and then the market's going to be uncertain. So I suspect the stock's going to struggle in the short to medium term. But once we have some stability and we have some, I suppose, clarity on where the economy is headed in the medium to long term, then I think things will start to run back and there'll be an opportunity. So okay. I like it, but I'm not buying it right now. So if you're there, you can hold it. If you've been there for a run, then you don't care. It's a good quality business. You can hold it. But fresh money, I'll probably wait.
Okay. All right, share price up 4% on the result. Cam McIntyre, the chief executive, who used to be the chief executive of car sales and did pretty well there, saying AI is starting to revolutionise their business as well and re-engineer the cost structure of it, which I thought
without
was
them having to spend billions of dollars on, as the hyperspenders do all the time. We don't call them hyperscalers, we call them hyperspenders because they're spending so much money. But the interesting thing with REA is I agree with Mathan, it's probably not a great time to buy it right now because it's on a still reasonably high PE ratio. I mean, its PE is 38, which doesn't make it cheap. But as a business, it's incredibly badly understood or misunderstood, considering it's a very simple business. It's an advertising business.
Yep.
It doesn't matter how many houses get sold, it matters how many houses get advertised and how long do they stay advertised. Now, if I put my house on sale and it sells in a week, I'm not going to advertise for the next week and the week after that. I say, oh, thank you very much, I stop advertising. On the other hand, if I can't sell my house and I put my house on sale and it stays there for 6 weeks and nobody pitches up to the auction, real estate makes more money out of me than they would have made out of me if I sold my house quickly. So
you're saying it could play into REA nicely?
Absolutely. REA does better when houses spend more time being advertised and does worse.
And more time on the market.
More time on the market, and does worse when houses sell very quickly because it only earns money out of them for a very short time. But almost everybody that I ever hear talking about REA talks about a downturn in house sales will harm REA.
So
It's
why wouldn't you be a buyer at these levels?
Well, I'm a very happy buyer if the share price was a bit more reasonable.
Right.
It's still on a PE of 38. I mean, if that PE got to about 30, I'd start getting enthusiastic.
Right.
You know, PEs of above 40 have never ever been sustainable, and 38 is pretty close to 40.
Right.
So if I look at its long-term PE, you know, pretty much every year, or at least half the years, you've been able to buy it in the low 30s, and 1 year even below 30.
So if it got to 30 PE, what share price?
Oh, well, that
would
share
you
price
buy
would be, I don't know, about 20% less than now, so $130 odd.
Right.
Just roughly off the top of my head.
Well, which was only 6 weeks ago. I did get down
almost
there.
was there.
131.69.
And in fact, I had an order in that I just missed because my order was at 130 or 128 or something, and it didn't quite get there. But several Teaminvest members did buy at round about 132, 133.
Yeah.
I was a bit too greedy.
Right, okay. Well, as you say, it could get down there. But if you're in a holder, good stock.
Yes.
Okay.
Oh, absolutely. I mean, I own them and I'm holding them. I'm not selling them.
Okay. All right, that's our stock of the day, REA.